If you've seen people making fortunes trading meme coins, you probably think it's easy. So many people are flashing their 100x profits. But is it really possible to make such profits? My name is Kai, and I've been trading meme coins for over a year now. I lost a lot of money when I first started, but eventually I figured out how to approach this market and managed to pull off 6 figures. Trading meme coins was easier a year ago. There weren't as many cheap scams and more tokens pumped to crazy market caps, giving way more 100x opportunities. People also tended to hold their coins longer, and the amount of pumps and dumps wasn't this insane. So is it still possible to make juicy profits? If you understand how this market works, you can still make crazy daily money from meme coin trading. In this video, I'm gonna walk you through one of my main strategies. It's based on technical analysis, or TA. Specifically, it's a price action strategy, and it's one of the 3 advanced strategies I personally use every day. And yes, it works great under current meme coin market condition. In trading in general, and meme coin trading in particular, there are 2 core strategies: technical analysis and fundamental analysis. Depending on what asset class you're trading, these strategies might look a little different, but the concept stays the same. Anyway, I'll cover narrative-based and fundamental strategies in future videos. In this one, we're going deep on TA, and we'll focus only on a specific valuable price area that show up on meme coin charts. Before we dive in, just a quick disclaimer: nothing in this video is financial advice. Everything I share is based on my personal experience. The meme coin market is volatile. You don't always win, and losing money is part of the game. So only play with money you can afford to lose. All right, with that out of the way, let's dive into the strategy and see how we can make some serious bank from this market. And make sure to watch till the end, because the details really do matter if you want to make the most out of this. Before we get into the strategy itself, let me explain a few price action concepts, especially for those who are not familiar with it. In technical analysis, there are areas on a chart that matter more because price reacted to them in the past. These are called price action levels. Based on price action theory, price moves in waves, creating tops and bottoms. When the market rallies, price goes up, it creates higher highs, meaning it goes up, then pulls back a bit, but not fully. Then it breaks past the previous high. As long as the price doesn't break the last low, we're in an uptrend. The opposite happens in a downtrend. The market makes lower lows, and as long as it doesn't break the last high, we stay in that downtrend. Of course, this is a simplified version. In reality, the market sometimes breaks highs or lows temporarily, but the bigger trend might not change, especially if we're in a larger trend on a higher time frame. Sometimes the price even consolidates in a range before picking a direction. We're not going deep into all that right now because you actually don't need it for this strategy. What we care about is using this concept to better understand support and resistance. So why does price react to certain areas and create support and resistance zones? It's because traders place their orders in those areas. That's where you get a battle between buyers and sellers. The outcome of that battle determines where the price goes next. For example, during a bull run, some traders place buy orders above resistance, expecting a breakout. They believe that if the price breaks a top, it shows strength and can go higher. Meanwhile, other traders want a better entry, so they wait for a pullback. When the price eventually drops and then rallies again, some buy orders don't get filled the first time around. This creates what we call a liquidity zone. That's why these zones are trade-worthy. When the price comes back down and touches them again, those unfilled buy orders plus new ones can create a strong bounce. Now that the picture is clear, let's talk about how and where to spot these zones. Support and resistance levels work on all time frames, but since meme coins are super volatile and there's often high slippage, if you're new, I recommend not going under the 5-minute chart. That said, if you're trading high liquidity coins, you can set slippage tolerance to 3 to 5% and still get your orders filled. With lower liquidity coins, your orders might not execute with such slippage. You need to set it higher. So where do we find high and low liquidity coins? For high market cap / high liquidity coins, I use the 6-hour and 24-hour trending sections on DEX Screener. You can access that directly on DEX Screener or through Axiom Pro, which has also integrated DEX Screener trending trending section. These tokens usually aren't brand new. They've been around at least a few hours, have decent market caps, and enough price action to use TA. Depending on the age of the coin and how the price has moved, you can adjust your time frame. For example, if a token was launched just 1 to 2 hours ago, the 5-minute chart is probably your best bet. But if it's been live for a few days, you can comfortably use 15-minute or even 1-hour charts to analyze price action. That was where we find our higher market cap coins. For low market cap coins, it's a bit trickier. You don't want to just dive into random pump.fun tokens. 99% of them go straight to zero before forming any price action. Instead, for 1-minute time frame scalps, I use the migrated section on Axiom Pro. Quick warning though, this is more of an advanced scalping strategy. Many of these tokens dump right after migration, so it's riskier. They're also less liquid, meaning you'll need a slightly higher slippage, which affects your risk to reward ratio, especially when your targets are small. I'll get deeper into that later in this video, but first, let's find our entry point. First, look for an uptrend with clear highs and lows, or at least 2 impulse moves with a pullback in between, which could signal the start of an uptrend. Next, find the last low before the most recent broken high. Draw a horizontal line at that low. Make sure it covers the candle shadows, but ideally doesn't cross any candle bodies. I say ideally because on low time frames like 1 minute, some minor gaps can happen. But for now, stick with the don't cross candle bodies rule. You'll find lots of setups daily, so don't force unclear ones. Start with the clean ones. As you get better, you'll spot more nuanced setups and learn how to draw lines on them. Anyway, once the line is drawn, wait for the price to come back down to that support zone. That's your entry. You can either use a market order, manually buying, or a limit order, which is more optimized since we already know our entry in advance. By the way, I'm using Axiom Pro in this video. It's hands down the best meme coin trading platform out there right now. If you don't have an account yet, use the link in the description for 10% off on all your trades. Now that you know how to enter the trade, let's talk about how to exit. Axiom Pro allows you to set both SL and TP under Advanced Trading Strategy. Just click on Add and select Stop Loss or Take Profit. Here's how I manage my exits. TP1 equal to my SL, TP2 equal to 2 times my stop loss, and TP3 is open-ended in case the token moons 10 times, 20 times, even 30 times. I usually set TP3 at 30x. If a token hits TP1 and TP2 and still looks strong, I'll start researching it deeper. But that's a whole separate strategy I'll cover in another video. For now, you can just set your third TP at 5x, which is close to where I often sell the last part of my position. As for stop loss, it depends on the time frame I'm trading. On the 1-minute time frame, I set SL at 30% because meme coins often bounce that much from support. On the 5-minute chart, I use a 50% stop loss. For higher time frames, scale those targets proportionally. Okay, that's the whole strategy. This strategy doesn't just have a great win rate, it also gives you a reward to risk ratio over 1, which means not only you win more than you lose, but also your wins are bigger than your losses. That means you can make solid profits even if you're not a pro yet. Just make sure to backtest first before trading with real money. Practice spotting setups, drawing support lines, and watching how price reacts. That's how you really learn. In the next videos, I'll break down my other 2 strategies. So if you're interested, subscribe and hit that notification bell so you don't miss out. See you in the next one.